Welcome to Standard 10 Economics class. We have already discussed about money, its features and its functions. We know that money is something which is generally acceptable in making and receiving payments. Money is also something which intermediates exchange of goods and services. So this definition of money highlights the functions of money. Now, to summarize the functions of money, there is a mnemonic. Money is a matter of function for a medium, a measure, a standard and a store. I am not going to go in detail discussing the functions of money here because we have done that earlier. So what I am trying to tell you here is money is something which is very important. And it is dealt in an organized market which is called as the money market. And this money market is nothing else but banks. So we have all learned that business, whether it is industry or whether it is commerce, it cannot flourish until and unless there is an adequate influx of money. And this difficulty of money or this difficulty of finance is removed by banks. So banks actually is a backbone of every economy. Rather, we can even say that banks help any economy to flourish or to grow economically. We can say that banks play a very, very important role, or they are instrumental. That's the right word I can use. They are instrumental in the economic growth and economic progress or economic development of a country. Now, before we talk about banks. Now, let me just give you a general definition of bank here. Now, for a layman, bank is a credit institution. It's a credit institution which is concerned or which safeguards the money of the savings of the general public and uses the same for making investments or for lending purpose. Now, before we go into detail, before we discuss the definition of what a bank is actually, so today we are going to learn about commercial banks. So let us just check out the history. Let's go, let me brief you on the background of how banking actually originated. Now, I've just mentioned to you that any country having an efficient system of banking will that will actually prove how well developed that country is. Banking system, an efficient system of banking is used as an index. It is an index for economic to measure economic development and growth of a country. So before we discuss the definition of banking, let me, as I've already said, that let me just brief you on what how banks originated. Now, to talk about the origin of banking, we can say that it dates back to the civilizations, because even during the civilizations, people were already trading. Now, it is it is believed that the first bank, first bank that was set up, it was somewhere in the 12th century, and this bank was set up only to help the monarchs during the wartime. Now, the place of birth or you can say the place of origin of bank is Venice in Italy. In Italy, the word bank for that matter, it is derived from an Italian word banco. Banco or bank, because at that time in Venice, banking transactions the business, the banking business was transacted at benches. So it originated in Venice. From Venice, it spread to Florence, and then it spread all over the world. Now, as far as banking in India is concerned, of course, India was a British colony. So this concept of banking was introduced to India by the British. Now, it is believed that the first bank, a commercial bank for that matter, that was established here in India, it was in Bengal, and it was established by an English publishing house by the name Alexander and Company. Now this English publishing house established this bank in order to, because they were in need of money. They were facing paucity of money to run their business. So in order to arrange or to provide finance to their publishing house, this bank was established. But very soon, in a very short period of time, the business closed down and closed down abruptly, and the bank also closed down abruptly. But after the Bank of Hindustan that was established after the closure of the Bank of Hindustan, British established another commercial bank in Bengal, and that is the Bank of Bengal. Okay, so this is just to brief you about the history. Now, it does not mean that banking was new to India. Although we said I've already mentioned to you that commercial banking was introduced here to India by the British, something which is very formal, but India was not new to this concept. Banking transactions did take place, or the borrowing of money or lending of money or depositing money. All these activities were happening in our country even in ancient times. In ancient times, we had the goldsmiths playing a very important role. They were like the banks. They were acting like banks. At that time, the merchants, the traders and merchants, they used to go on long voyages. Now, before they set on their voyages, these merchants, they used to hand over all their wealth, their money, to the goldsmith for safekeeping. And when the goldsmith would receive that from these merchants, he used to issue them a document. And this document the merchant had to preserve, so that whenever he wished to claim his wealth, he had to produce it to the goldsmith. Now the goldsmith was collecting the wealth, and he realized that this wealth is just lying idle. Why not use it for lending purpose? Because people were in need of money for different reasons. So he started using this wealth that was deposited with him by the merchants. But again, at the back of his mind, he had this thought that what if the merchant suddenly pops up in front of him and demands his money back? What is he going to do? So that is why he also started creating reserves. So the same principle is even applied now in the modern banks. So that is why I said that although commercial banking was introduced to India by the British, India was not new to this banking activity, because we were trading right from time immemorial. Okay, so now to talk about the modern, I have just mentioned to you about this now, that is how banking started in ancient India. Now, pre-independence India, even during that time, when British was ruling over, when the British was ruling over our country, we have industrialists, or we had business houses here, like Tatas and Birlas. They are business tycoons right from the pre-independence period. So they were running their business here, and the British banks, the English banks that were here, they did not cooperate much, or they did not show any kind of concern for the Indian businessmen. They did not support them to help them to grow their, to provide finance to their business. So these business tycoons decided that they should establish banks. And that is why most of the public sector banks that we have, like UCO Bank, for example, it was established by Ghanshyam Das Birla. It is a Birla bank actually. The Central Bank of India is a Tata Bank. It was established in 1917. So most of them are established by industrialists with an aim, or with the purpose of supplying or providing finance for their business. They were more interested. They were facing paucity of funds. They wanted money. Okay, they wanted corpus to run their business. So they started these banks. So they started mobilizing the savings of the general public. But again, there was an outrage among people, because these banks Okay, they were mobilizing the savings, but when it came to lending of money, they did not show so much of cooperation. They did not lend money because that money was used by these business houses. So there was an outrage. People were aggrieved that whenever they were in need of money and they approached the banks, they did not receive any kind of cooperation or concern from them. So in the pre-independence era, the British passed a legislature, a law was enacted in order to keep a check on the activities of these banks. And the same act was later on, that is when India attained independence, the same act was revamped or it was amended, and it came to be known as the Banking Regulation Act of 1949. So, as per the provisions of the Banking Regulation Act of 1949, in India today, we have an organized sector of banking and we have the unorganized sector. Unorganized sector consists of your money lenders, your unscrupulous money lenders. Whereas the organized sector, we have the Reserve Bank of India, which is the topmost or the apex bank of the country. It is the central bank of India, and as central bank, Reserve Bank of India keeps a strict vigil on the activities of all the other commercial banks that are operating here in India. The Banking Regulation Act of 1949 has empowered Reserve Bank of India to inspect the books of accounts of all the commercial banks. This is followed by the State Bank of India. Now, State Bank of India was also established in the year 1955 by acquiring the assets of a British bank, the Imperial Bank. Then we have the exchange banks, which is they are also a part of our organized sector. Exchange banks are the backbone of international trade. And last but not the least are your commercial banks. Okay, commercial banks are joint stock companies that are driven by a profit motive. I hope I have made myself clear. And commercial banks, if exchange banks are backbones of your foreign trade or international trade, then commercial banks are backbone of your internal trade. Now, how do they function? That's the question. They are profit-making organizations. They are credit institutions, but they are commercial organizations that is driven by a profit-making motive. They are joint stock companies. All right. So, how do they generally function? They perform two important functions. They are accepting deposits from the public, because that's exactly what the bank is doing. I've just introduced that to you. Banks are actually credit institutions which mobilizes the savings of the general public and utilizes the same money for lending purpose, for making investments. So it is safeguard. So banks generally, what do? They are safeguarding people's money, the money which is lying idle at home. Okay, and we are inviting risk. If at all we keep money at home, we are inviting risk for ourselves. So might as well, for safety purpose, we can keep the idle money with the bank. Bank will use that money for making loans. Okay, so people are in need of funds. Businessmen need fund. Even householders, we have for so many personal uses. So what do? We approach a bank for a loan. So that money is used by the bank for making loans. So when they are accepting a deposit, they are paying an interest. And when they are lending money, when people are borrowing from the bank, they are charging an interest. So the difference between the interest charged and the interest paid is the profit of the commercial bank. I hope I have made myself clear. Alright, so now let us check out the definition. Okay, what is the definition of your commercial banks? Because I have said they are joint stock companies. They are driven by a profit-making motive. They are commercial organizations. Alright, and this is the definition given by Banking Regulation Act of 1949. Okay. Now, bank and banking. Banking is an activity. Okay, banking is an activity. Banks are institutions. They are credit institutions that safeguards people's money. I'm repeating this time and again so that you have to understand the concept. This is a layman, or this is a definition used to define banks by a layman, or in common parlance, I would say. It is a credit institution safeguarding people's money and using the same for making advances or for investment purpose. The simplest way to understand banks is bank is involved in buying and selling of money. It's a money market. They are buying money, they are selling money. Is that understood? They are mobilizing people's savings. Fine. Alright. So here again, definition of commercial banks. It's the same. They are just, the definition is highlighting the important functions of a commercial bank. So as per the provisions of the Banking Regulation Act of 1949, banking means the accepting for the purpose of lending. So here it is highlighting the function, okay, the function of a commercial bank, the purpose of lending or investment of deposits of money for the public, repayable on demand or otherwise, and withdrawable by check, draft, otherwise. Alright, okay. Now the money that we deposit with the bank, I have said, it is used by the bank for making advances, for advancing loans, okay, for investment purpose. People are in need of money. Okay, businessmen require money to run their business, so they borrow money from the bank. And from where does this money come from? It is our deposits which the bank is using. Okay, and at the same time, bank cannot deny, it is our money. Okay, we have deposited our money in our account. We are operating an account with the bank. Okay, it is our money. So whenever we are in need of money, bank cannot deny. Okay, bank has to allow us to withdraw it using different instruments of, negotiable instruments. We can withdraw money using checks. Okay, and various other instruments like demand draft is there. Today we have come to a juncture, where we can say that we need not visit a bank at all. Everything can be done at a click of a button. We are so used to net banking, isn't it? And today we are gradually moving towards being a cashless society, because hardly we carry hard cash or liquid cash with us, but yet payments are received, payments are made, and it's because of technology. We have our ATM cards, we have our credit cards, debit cards, and then again we have so many apps like Google Pay, Paytm, isn't it? So receiving payment, making payment has become very, very simple. So banking is advancing. Today banking has become most technology savvy, isn't it? Okay. So yeah, let's come back to our definition here. I have already analyzed the definition. So this definition is emphasizing, or it is highlighting the important functions of a bank, which is accepting deposits and granting loans or lending money. Okay, and once again I'm reminding you, commercial banks are joint stock companies. Alright, so now before we talk about the functions of a commercial bank in detail, let us check out the features of a commercial bank. What are the features? I have already told you. Commercial banks, they play a very, very important role in promoting internal trade. Precisely, we can call them, or they can be regarded as, as a backbone. Okay, backbone of an economy. Alright, backbone of your internal trade. So the first feature of commercial bank is that it deals in money. When I introduced the topic, I spoke to you about money. And I said that money is bought and sold in an organized market called the money market. And this money market is nothing else but a bank or a financial institution. Now here again I would like to highlight the difference between financial institution and a bank. Okay, banks perform the function of accepting deposit and lending money, whereas financial institutions, they either accept deposits or they lend money. They don't perform both the functions together. That is the major distinction between a bank and a financial institution. Okay, so banks here, they deal in money, they are buying and selling money. Then credit institutions, these are credit institutions with a profit motive. It's a commercial institution. And all commercial institutions they are all profit making organizations. So these are basically like joint stock companies. Banks are run by board of directors. Okay, and they are accepting deposits. They are also lending money. So what are they doing? When they accept deposits, they are paying an interest. When they are when people are borrowing money from them, okay, they are charging an interest. The difference between the two is the profit of the commercial bank. Alright, next here, it's a unique financial institution that creates demand deposits which serve as a medium of exchange. Okay, we will talk about the different types of accounts, but here, just to understand this feature, I would like to tell you that businessmen, traders, merchants, they operate current accounts which are also known as demand deposits with a bank. Now, businessmen they need money, okay, umpteen number of times. They require working capital. They need money to run their business. So, there are no restrictions imposed on demand deposits or current account by the bank. They are given free hand to withdraw money as many times they want, okay, and also deposit money as many times they want. At the same time, this businessman, whenever they face any crisis, financial crisis, they approach the bank for a loan. Okay, there are so many other credit facilities which we are going to talk about later, which the bank, okay, which the businessman avails from a bank. So whenever they are borrowing money from the bank, they, that money is deposited by the bank because he's running an account, a current account with the bank. Okay, the money that he is borrowing, it is deposited in his account and he will withdraw it from that account. And this loan which he is taking, it is repayable. He has to repay it within a stipulated period of time, together with an interest. So here the current account is like a medium of exchange. Okay, it's like a medium. So bank is, whenever he is borrowing money, that money will be deposited in the bank, in his account by the bank. He can withdraw it directly, and then he's repaying it to the bank. So that is why it is said that it's an institution that creates demand deposit which serve as a medium of exchange, and then it deals with general public. It is for the commercial banks are banks of common men. Okay, it deals with general public. So these are the important features of a commercial bank. Next, now let us talk about the primary functions. The functions of commercial bank. Now, functions of commercial bank can be bifurcated or it can be classified under three categories. We have the primary function, there are agency functions, and the general utility functions. So today we are only going to talk about the primary functions here. Okay. Now, under primary functions, we have accepting deposits. Primary functions include accepting deposits and lending money. Alright, so today we will talk about accepting deposits here. First and foremost, the fixed deposits. Now, fixed deposits are also called as time deposits because this deposit or this account that is operated by an account holder, it is meant for a certain stipulated period of time. That is, if at all I want to operate a fixed deposit account with a bank, I will have to deposit a lump sum, a large amount, which could be even your 50,000 or it could be a lakh or even sometimes even 10,000 also, doesn't matter, according to your affordability. So a lump sum is deposited with the bank. You are handing it over to the bank, and bank will keep that money for a certain stipulated period of time, that can range from 6 months to at the most 5 years. And bank pays a very high rate of interest on a fixed deposit. Okay, but currently with the kind of situation that we are trapped, the rates have totally collapsed. Okay, but anyways, for you to understand, fixed deposits, okay, yeah, fixed deposits are, what shall I say, they receive a higher rate of interest. It is a source of income for many people. I'm going to say source of income for people having surplus money. And whenever a person is operating a fixed deposit account with a bank, at that time, bank will issue him a receipt, and that is called as the FDR, that is fixed deposit receipt. So we already spoke about the fixed deposit. Now next is the recurring deposit. Now recurring deposit is a combination of fixed deposit and the saving account. Alright, the main purpose of recurring deposit is to inculcate saving habits. So what did we say about fixed deposit? I said that we have to, the deposit, fixed deposit holder usually deposits a lump sum with the bank for a certain stipulated period of time. Okay, and that is why it is known as a time deposit. Alright, and he is allowed to withdraw that money only after the expiry of that period. Once it could be, now that period can range from 6 months to 3 years or 5 years also. Once that time period is over, only then he will get his money, principal amount together with an interest. But if in case in between he is trapped, he is caught up in a financial crisis, he is allowed to withdraw the money, but he will have to forego the interest on the money that he has withdrawn from his fixed account. Okay? Now, in the case of a recurring deposit, instead of depositing a lump sum, okay, the recurring deposit holder is expected to deposit any amount according to his affordability or according to his capacity, whether it is 500 rupees or it could be 10,000 rupees also. Every month he is supposed to, on monthly basis, is depositing that money with the bank. And then this money goes on accumulating, and this is for a certain stipulated period of time. You are not allowed to withdraw the money in between. Okay, the money goes on accumulating. And then he can, after the expiry, it could be 6 months or it could be 3 years. Once that period of time expires, he can withdraw his money, the principal amount together with an interest. And the document which is issued to a recurring deposit holder is a passbook, so that the bank can make periodical entries in the passbook and he can keep a track of his account. Now fixed deposit is also, the recurring deposit is also known as cumulative time deposit. Fixed deposit is called as a time deposit. This is cumulative because cumulative time, that means it clearly indicates it is meant for a certain stipulated period of time. So till then you cannot touch the money. And as against your fixed deposit where a lump sum is deposited, recurring deposit, you are depositing, the deposit holder is, the account holder is depositing a certain amount every month, periodically, a monthly basis, Okay? And the interest that is received on recurring deposit is somewhere between your fixed deposit and the saving account. It is less than fixed deposit, more than saving account. Okay? Next one here is your saving deposit. This is basically for saving, to inculcate saving habit and thrift. The next here is current deposits, or also known as demand deposits. Now this is operated by businessmen. And because it is operated by businessmen, bank does not impose any restrictions on saving account. Yes, there are restrictions. Okay, you can deposit money as many times, but on withdrawals, of course, bank restricts withdrawals, because if at all people are allowed to withdraw time and again, then the whole purpose is lost. Okay, but since current account or demand deposits are operated by businessmen, there are no restrictions. So current account, the money deposited in the current account, bank cannot use it for lending purpose. So therefore, usually no interest is paid on the current deposits. But at the same time, current account holders can avail various credit facilities, which we are going to discuss later. Okay, so these are the different types of deposits offered by the banks to the general public. So let's run through once again. It is the fixed deposit, alternately known as the time deposit. You are depositing a lump sum for a certain stipulated period of time, and once that period of time expires, the deposit holder can avail his principal amount together with an interest. Recurring deposit, alternately known as cumulative time deposit, because every month the account holder is depositing money, it goes on accumulating for a certain stipulated period of time, and then once the time period lapses, he can avail his amount, he can get his amount together with an interest. Okay, saving account, it is basically to promote saving habit and thrift. Current account is operated by businessmen. Okay, and current account holders avail various credit facilities. Now, the next question, why operate an account? What is the main reason? Safeguard idle money, these are the advantages. Okay, why should we have an account with a bank? Why operate an account? So that we can safeguard. It is a credit, I have already mentioned to you, it's an institution which is safeguarding people's money. Okay, so it safeguards idle money. To withdraw money easy using checks. Checks are negotiable instruments. So whenever we are in need of money, we can withdraw it on demand. Bank cannot refuse to give us our money. So using various negotiable instruments like a check, we can withdraw our money, and then it is a source of income for many with surplus money. This is basically with reference to your fixed deposits. Fixed deposits are a source of income for many, because there are people who are very conservative. They do not like, they don't want to invest their hard-earned money in any project or something, or neither they want to invest in shares and securities. So they prefer to keep it with a bank and earn a rate of interest on that. And that rate of interest is like a source of income for them. Alright? Okay, so these are the reasons for opening, or rather I would say these are advantages of opening and operating an account. So this is all for today's session. To next session we will talk about lending money. Thank you so much.